This report is brought to you by the Richmond Club, where investors in high-growth companies meet.
High-risk drivers have somewhere to turn for insurance coverage. Kingsway Financial is an Ontario-based company that caters to this demographic, as well as the trucking and motorcycle sectors. September 11th had a huge impact on many insurance companies, and a recent KPMG study showed that insurance companies, whether impacted by 9/11 or not, will be increasing their prices.
There was some benefits for us because many of the insurers and reinsurers that were hurt because of September 11th start withdrawing from some lines of business. And as such, we wrote a lot more of the business that we wanted at the higher prices.
Star says Kingsway was able to increase its volume by $400 million in 2001. A big part of its business model is to avoid getting into price wars with other insurance companies. He says because of the specialized services they offer, they can and will continue to charge more for insurance.
During the soft market prior to year 2000, we were holding back on growth, but we supported our infrastructure because we felt rates were too low, so we didn't want to write the business at the lower prices. When 2001 came, many companies were hurting and withdrawing from lines, so we were able to write a lot of additional business at our prices. And we concentrate more on profit than simply the size of the company. And so it left it wide open for us to pick up a lot of additional business that other companies no longer wanted.
Kingsway stock is an interesting story. In the last year, the stock, which trades on the TSC as well as New York under the symbol KFS, has gone from $7.50 to $20.60. It currently trades in the $19 range. Net income for its most recent quarter was up by 47% to a record $14.3 million, compared with $9.7 for the same period the previous year.
The stock is attractively priced relative to comparable companies, particularly other low combined ratio companies in the United States. And finally, the stock is attractively priced relative to its own historic valuations.
Goldberg says HSBC has a target price set at $26.50, which represents a gain of about 35% from current levels. Star says 2001 was a milestone year for Kingsway, with a listing on the New York Stock Exchange, as well as surpassing the billion-dollar mark in terms of sales.
This report was brought to you by the Richmond Club, where investors in high-growth companies meet. For a free copy of a research report about this or other Richmond Club featured companies, please visit our website at www.richmondclub.com.